the dating inverted yield curve. Today we discuss.
Welcome to Venezuela Insider, the only place in Venezuela for expats, digital nomads, entrepreneurs, investors, travelers, and related internationals. For more information, venezuelainsider.com.
Today, yet again, we have one of these weekend videos in order to relax and forget about economics, finance, businesses, and so on. However, today is going to be a little bit different because, yes, we are going to talk about economics as well. And bear with me. Let's talk today about the inverted yield curve in dating and how this phenomena is affecting, of course, the worldwide dating market. And yes, please bear with me. We have to explain another economic term. This case is the inverted yield curve. And this particular concept is concerning the treasury bonds in the United States. And this is a very important economic indicator that usually is the prelude of a recession, a collapse, an economic collapse on the stock market and also on the worldwide economy. It consists that you have different treasury bills, bonds on the US market, usually, of course, the government bonds issued by the US Treasury. And these particular bonds, you have bonds with different durations, and hence, when you have different durations, you have different coupons, you have different returns on such bonds, aka yields. So usually when, of course, let's explain what a bond is. Just please bear with me very quickly. A bond is usually an IOU. So basically, you issue a bond, in this particular case, the United States, the US Treasury, is basically a loan that they are requiring from the bond holder, the bond buyer, usually a bank, a larger corporation, or a foreign institution. Very good on that. So different bonds have different durations. You have 1 month, 3 months, 1 year, 2 years, 10 years. That is actually the benchmark for the debt market worldwide. And you have the longest one, that is a 30-year bond. And since when you are loaning money, you are issuing debt, the longer the duration on such debt is more risky and hence requires a larger yield, so a larger return on your investment, on this particular case, the money that you are lending when you are buying such treasury bond. Very good on that. So basically, the curve goes like this. The shorter the bond, the yield on such bond is actually lower. And when you have a larger, of course, a longer debt, like 30 years, 20 years, you are going to have usually, in practice, you are going to have a bigger yield on such bond. However, what happens is that sometimes this particular curve inverts, and you have to take the reference of the 2-year bond and the 10-year bond that I already said, that is the benchmark for the worldwide loan market, bond market, worldwide. Very good on that. So what happens is that on specific cases, historical times, before a recession, you have the yield on the 2-year bond is going to be higher than the 10-year yield on the bond. Usually happens a few months before a recession or an economic crisis. Now, what happens with dating? We have dating bonds, we have dating yields. Well, actually, some of that nature. Here's what happens. You have the dating market. It's an inefficient market, so it's not as straightforward. But basically, you have the demand for dating from men that is usually higher than the supply of dating of aka females on that particular market. So basically, the males on the particular market, they have to, of course, put resources on the table that have to be accepted for the female in order to, of course, complete the transaction, if you catch my drift. Very good. Now, here's a funny thing regarding dating, that historically women demand more time regarding, of course, men benefit the most when the dating is a short-term dating relationship. Meanwhile, the longer the relationship, the female benefits the most regarding such relationship. On longer relationship, historically, female benefit the most regarding that. So on short term, the yield that the women requires is gonna be higher than the yield that women require on a longer relationship. What happens? So basically, is a yield curve that the shorter the relationship, the most expensive is gonna be the transaction, quote unquote. Now, what is going on the worldwide dating market? Recently, I'm talking the past 7 to 10 years, something of that nature, and also depending the location, usually this happens more in the West. What is going on? That is that we have an inverted yield curve regarding dating, because right now women are depreciating a lot the long-term dating market, and they are putting a premium on the short-term dating market. That is counterintuitive for the average female, but it is what it is. What is going on right now is that, of course, women are right now reducing the yield on the short-term dating. So, aka, we have more promiscuity amongst females on worldwide markets, especially on Western markets. So what happens is the yield is actually lower for female on the short term. Meanwhile, women are demanding less and less and less. Going to time, they are demanding less these long-term relationships like marriages and long-time dating and, being a couple and that kind of thing. And that is decreasing actually the yield as well. So right now we have an inverted dating yield curve. The short term is actually getting quote unquote cheaper. Meanwhile, the long term of the curve is actually getting more and more expensive, because the supply for females for long-term dating, and of course the quality and the standard, is also depreciating very fast. Meanwhile, that demand for long-term dating is actually, let's say, stable on the main counterparts. So right now we are seeing in the West, and actually worldwide, not only on the West, but in the West is the more prominent, this particular trend, and it's manifesting on real economic terms. I'm talking real economic macro indicators, not just my own made-up macro indicators. The dating inverted yield curve actually doesn't exist at the moment. Right now, if someone creates it, that's my thing, I coined that term. Funny thing though, now talk about real economic indicators. For instance, the birth rate. The birth rate on Western nations, the US, Canada, Australia, European Union, and New Zealand, those are falling sharply. But actually, not only on Western nations, also in Latin nations, Southeast Asian nations, also the birth rates, the replacement rate, right now, the birth rates per women are actually lower compared to the replacement rate of 2.1 babies per woman. Also, the marriage rate is decreasing. And you can see this chart from the United States is sharply decreasing on the past couple of decades. Same thing in Canada, same thing in the European Union, same thing in the UK, and actually in other countries, less developed nations like in Latin America and Mexico, Argentina, Colombia, that particular rate is decreasing as well. And actually, something that is a buzzword right now on the economic world and the economic news world is the term DINKs. DINKs means double income, no kids. Basically, they are couples and many couples worldwide that they are dating. Usually both of them have decent jobs, so they have decent incomes, hence have more discretionary income because they don't have children of their own. At best, they have like a pet or something like that, a dog, a cat, something like that. So these particular people are having an economy that is actually quite interesting because they work a lot and hence they don't have children. They have more discretionary income. Some of these people go out restaurants and do shopping a lot and travel the world and that kind of thing. This is a trend seen on the West, actually, a lot right now, but also on other countries in, let's say, in Latin America, in Asia, in India, China, those places. Now, this is a funny thing. How do you solve the inverted dating yield curve? What I will say is, if you're listening to this as a male, what I will say is that you have to go against your urges and necessities and basically short both of the ends of the dating curve. First, don't pay a premium for short-term dating. That is the first thing. I mentioned this a bunch of times. Short the short term. I mean, short the short, something like that. Okay, can you catch my drift? Don't overpay for short-term dating. That is the first thing because that's the leading indicator for females on the demand, on the supply side. I'm sorry. So if you short the short-term dating, that is going to send a signal to the female counterpart that the long-term value of their particular, supply on the market is going to decrease as well. And the second thing is regarding the longer part of the dating yield curve is pay a premium, in this particular case, pay a premium for high quality standard of short term. I'm going to use economics yet again. We already explained that the 10-year treasury bond is the standard, the benchmark for the bonds market worldwide. So because the United States, of course, they are reliable regarding their treasuries and their debt when they issue debt. And actually they should be because they have decent institutions in the United States, the Federal Reserve and that kind of thing. Now, if you're listening from the USA, you think it's terrible, but actually in the rest of the world, it's way worse. And that's the first thing. So borrowing money, paying 10-year treasury bonds compared to the German bonds, the European bonds, Banana Republic bonds that are actually, this is junk debt, actually on economic terms, corporative debt, that kind of thing is more risky. Hence, is a saying in finance, Tina, there is not an alternative. And hence, you have to buy the 10-year treasury bonds. Okay, that's the funny thing. Now, what you need is on the long-term curve of dating, on the supply of dating for females, what you're going to do is pay a premium for the high-quality, low-risk, long-term supply of, long-term dating. Hence, basically pay a premium for good quality women that offer a lot of high returns on a long-term dating market. That is my complete advice. And women on the other side, so I'm going to be fair, I'm going to be with women. Women, they have to make the their short-term supply, put it high, charge an extreme premium on the short-term dating. So, I mean, of course, if a millionaire, a billionaire show up with a private plane, something like that, I mean, these guys have to do a lot in order to access the short-term dating because that is where women held the most value and also is the signal, the indicator of the market for the long-term market. Very good on that. And when you reach if you're a female, listen to this, the two or three of you, because this channel is mostly for men, but that's for another thing. Well, the funny thing though is that when you reach the long term on the supply of the dating curve, is offer the best, offer high quality on a premium, but at the same time with reasonable standards, and hence you are gonna yet again turn back again the long-term dating curve. And by the way, this is not investing advice, not economics advice, anything like that. This is just a fun food for thought video. I cannot wait to read your comments below.
Thank you for watching Venezuela Insider. Please like, share, and subscribe. Follow us on social media. If you want to work with us, VenezuelaInsider.com. Thanks again and have a nice day.